My name is Leonardo. I am one of the editors at the Pine Chemicals team at Argus Media, and this presentation was prepared in conjunction with Argus Pine Chemicals and hydrocarbon resin teams. So today's presentation, it's all about the situation that we see in today's industry, navigating pine chemicals in challenging times. Here are some quick legal notices about this presentation. And for those of you who are not familiar with Argus, Argus is a leading independent provider of market intelligence to the global energy and commodity markets. It offers news analytics, consulting services, data science tools, and industry conferences to illuminate complex and opaque commodity markets. We have a headquarters in London with 1,300 staff, and Argus is an independent media organization with offices all around the world. We have 29 offices around the main trading hubs. I work at the Spanish office. And here's today's agenda. Today we're gonna talk about the global market. We're gonna do a global overview of the Asian, South American pine oleoresin markets. Then we'll go and talk about crude oil, the CTO markets from a supply and demand perspective. So we're going to look to some market fundamentals. And of course, we're going to discuss a little bit of the hydrocarbon resin markets. It's a substitute, it's a competing market for rosin esters. So it's good to understand what is the supply, the demand and capacity rates, and what is the market outlook for the HCR markets as well. This year, the world has seen bearish markets with soft demand across various industry sectors. In rosin and turpentine markets, buyers deal with still elevated inventory levels amid weaker downstream demand. We have seen that happening across many geographies. And there's been abundant supply in several markets along with higher buyer stocks, and that has been pressuring the margins of suppliers, which have faced a continued downward pressure. In China, everybody expected that the Chinese economy would see a rebound this year, but that didn't take place as expected. And in fact, China's growth has been constrained by a growing debt. Just for you to have an idea, China's debt to GDP ratio has increased to nearly 280% just in the first quarter of this year, according to Central Bank and Statistics Bureau data. China is now at its peak season, but the market sentiment in China is not positive. The sentiment is downbeat. Downstream derivatives continue to see weak dynamics, and gum rosin plants in China are not actively purchasing volume. On the supply side, pine oleoresin producers in China face tight and in some cases even negative margins. I remember that earlier this year, the industry in China had its annual gum rosin conference, and at about that time, the expectation of the industry was that Chinese crude gum or pine oleoresin production should be at about the same level as it was last year, but now that outlook has been downgraded, has been revised down, and the market now expects pine oleoresin production to actually decrease compared to last year amid slowing moving stocks in key buying markets. The same downward pressure is also affecting the Indonesian and the Vietnamese markets. You know, these are some of the key markets for gum rosin, for gum turpentine as well. As I said before, there is abundant supply and a persisting weak demand scenario with buyers only getting product if pricing is competitive. As you can see on the charts, these prices are just representative. These are historical prices. They go just until May this year. But we can see that the market has faced a downward pressure in recent months. And in the case of Asia and Southeast Asia, these markets face the threat of El Nino, which may affect pine oleoresin output in already bearish markets facing soft downstream demand. China, as I mentioned, is now at peak season, but the peak season in China should end in October or late October. And recently, China has faced some headwinds in terms of pine oleoresin production because there's been rainy weather in several producing regions in China, and that rainy weather made it more difficult for the Chinese to tap the pine oleoresin and also to transport it. So in addition to all this market factor stuff we've discussed about, recently they've been facing a rainy weather, which is not positive from the supplier's perspective. Looking to the Chinese gun turpentine market, demand remains weak on soft economic fundamentals, but demand has slightly improved in recent weeks. The Chinese gun turpentine markets, the Chinese derivatives processors, just like in the case of gun rosin plants, they're just buying small volumes as the economic outlook is not that confident, is not that certain. Supply is expected to be sufficient over the coming months, but the market, especially the gun turpentine market in China, is sensitive because of its limited size, and increasing demand could result in an upward pressure. Looking to the South American pine oleoresin markets, there's been downward pressure, and that downward pressure is affecting the margin of producers. And here we have some interesting data. You can see on your left, Argentina pine oleoresin prices and costs. You can see the historical data, and you can see that from the second half of last year until early this year, prices have been trending down. You see that costs, direct costs, and that includes operation costs from installing the collection bags, the wires through which the collection bags are strapped to the collection, the drumming of pine oleoresin, fuel costs, so all costs are included there, and you can see the costs have been increasing, and you can see that on the bottom line, the black dotted line, you see that gross income margins have been close to zero, and that is a real concern for the industry in Argentina. And a similar trend has been happening with Brazil. The other graph for Brazil is slightly different, but we can see here what would be the market prices in Brazilian reais. And you can see the low end and the high end production costs for producing pine oleoresin in Brazil. It depends on where you are in the industry. You can fit within this range, but you can see that as the price goes down, it shrinks, it gets tight, and in the case of Brazil, that graph does include, for example, pine oleoresin producers that do not own the forest. You know that in China, in Argentina, and in Brazil as well, many smaller producers, they pay forest lease agreements that can be, for example, 30%. So they pay 30% of their income to the forest owner. And if we take that into consideration, we can see that the margins are tight and in some cases negative. So more workers have ended or renegotiated forest lease agreements in Brazil and Argentina because of current market conditions. And there is a concern that pine oleoresin production in Brazil could decline in the next stepping season. Now let's take a look at the CTO markets, and we saw that this year, and I think Michelle has addressed the rosin side as well from a CTO perspective. Demand for rosin is depressed across the downstream markets like printing inks, paper sizing, and hot melted adhesives. Brazil, which is a key market, has offered abundant material during the first quarter of the year because Brazil was on peak season, was on peak tapping season. But at that time, buyers were already dealing with elevated stocks, which were carryover from the second half of last year to early this year. And these stocks had been acquired at higher price levels. So the weaker downstream demand, abundant supply during peak season in Brazil, and high stocks led to a continued downward price pressure, to a continued pressure in these markets. A similar trend has also affected the tall oil rosin, the TOR, and the TOR esters markets. You know that fatty acids and rosin are some of the biggest fractions that fractionators get when distilling CTO. So with higher price CTO, soft demand, and elevated rosin stocks in Europe, CTO fractionators are not willing to take in more CTO material, as this would result in even additional rosin volumes at a time demand and pricing for tar and tar esters is weak. So this overall scenario has led to lower fractionation rates this year. So we can see on the right the US CTO export volumes this year compared to last year. We can see that CTO exports are now down this year. If we look at the data to the customs data from January through June this year, the US exported nearly 30,000 tons less of CTO compared to last year. And looking to Europe and looking to the capacity expansions for CTO, the only CTO expansion project will only partially offset the capacity losses that we have. I remember Michelle addressed this point as well yesterday with the recent US pulp mill shutdowns. There's also been a shutdown in Europe. And this expansion is located in Kemi, Finland, and it's owned by Metsä Group. So the new Kemi bioproduct mill is expected to be operational this year. And the company said that it's now preparing for a maintenance connection shutdown, and the aim is to start up the site on 20 September, according to a company's press release. So looking forward, the demand and supply balance for some of the key CTO fractions like TOFA and tar will be key in setting the dynamics for these products. Right now, because fractionation rates are lower, TOFA supply shorts. On the other hand, tar is long, and the depressed rosin markets limits the appetite of fractionators to get in more CTO as a feedstock. So the unbalanced supply and demand situation has been the reason for these changes and for this pressure that we have seen in the markets. And on the other hand, there are also plentiful and lower price petroleum-based tackifier resins, and gum rosin-based material is also available. So looking from the tar oil perspective, from the tar oil rosin esters, those compete with the petroleum-based tackifying resins with HCR and also with the gum rosin esters. So we saw that supply has remained tight. We saw that there has been more projects and more companies demanding CTO as a feedstock. And the availability scenario has been exacerbated by the war in Ukraine and the recent US pulp mill shutdowns. We can see on the right on this graph, this number for Russia. It's the estimated Russian CTO production. Of course, not all Russian CTO production was going to Europe, but a chunk of it, about 50,000 tons a year, was being supplied into Europe. And we can see the number for US pulp mill shutdowns completed by August this year. It doesn't include, for example, a shutdown for Washington State in the US. So taking the 60,000 plus the 50,000 Russian CTO, we have about 100,000, 100,010. It depends how you estimate it, which is similar to the number that Michelle provided yesterday. So, as I said, the war in Ukraine was one of the factors shrinking the overall supply. And of course, the lack of Russian volume going to Europe has affected the overall CTO availability. In the US, pulp mills producing CTO were shut down in Florida, North Carolina, and South Carolina due to business restructuring and the high operating costs and capital investment required to upgrade some of these pulp mills. So late last year and until recently, CTO prices increased because of demand into biofuels and short supply due to the Russian war amidst reduced availability because of the US pulp mill shutdowns. As CTO prices in the spot market increased, buyers of some fractions like the oil fatty acids, also known as TOFA, tall oil rosin and tar esters have started to look for replacement products like rosin esters, in the case of tar esters, and even hydrocarbon resins. In the case of TOFA, and of course it depends on your market application, you can formulate away from TOFA to SOFA, which is soy oil, fatty acids, and even oleic. So the short-term outlook for gum rosin esters and tar esters is challenging. Rosin supply is long, but the potential rebound in a tight supply scenario could change the current market dynamics. Brazil, a key supply market, is concerned with its next tapping season, as I said, which will begin in October or November. And reduced pine oleoresin production, a reduced pine oleoresin tapping season in Brazil could decline the supply of pine oleoresin and of course its derivatives, because this downward pressure has been prolonged, and as I mentioned before, it has affected the margins of producers. So there's a concern in the industry that reduce Brazil, and I can say the same for Argentina, will reduce gum rosin and likely gum rosin esters production. So looking to the tar ester side, supply is sufficient to address the reduced demand scenario, but stronger demand could affect pricing as the availability becomes shorter, because as you remember, CTO supply is inelastic. So right now, across the end market, some buyers face the dilemma of whether they should continue favoring the natural-based feedstocks because of sustainability requirements, or whether the economics of cheaper feedstocks make more sense. In that sense, the increased usage of hydrocarbon resins may hinder the efforts of some buyers towards a reduced carbon footprint. So now let's take a look at the hydrocarbon resin markets with data provided by Argus C5 and HCR Resins lead Steve Williams. So last year we saw that global hydrocarbon resins production increased by just under 2% to 2.1 million metric tons, with a strong first half of the year, followed by a much weaker second half of the year. As we can see in the graph here, we see that capacity has been gradually increasing over the years, but as capacity increases, we see that capacity utilization rates has been declining, and right now we see that overall operating rates have dropped to 66%. New capacity additions are projected to far outweigh demand growth this year and next year, which will result in even lower average operating rates across the globe. So now let's look at HCR capacity by type and region, and that includes all types of HCR, and that includes C5, C9, HHCR. Global production capacity for these combined markets grew 10% from 2021 to 2022, and is now forecast to increase by about 6 up to 10% this year and next year based on new capacity in China. For last year, Asia Pacific capacity grew by over 13% and now represents almost 78% of total HCR capacity. So we see that much of the HCR capacity is now in Asia Pacific. Global operating rates have fallen from 91% in 2022 to just 60% in 2022 for the case of HH, hydrogenated hydrocarbon resins. Looking to the C9 HCR market, capacity had been growing slower due to weaker margins and excess of capacity, but last year we saw capacity growth by 8.5% with the startup of plants in China. So we do expect leading the way of capacity additions for the next several years, and Asia Pacific should still represent the majority, or about 83% of total C9 HCR capacity. So here are my concluding thoughts. So we can say that the demand outlook still remains uncertain across the rosin and turpentine markets. I've been at FICA, which is a conference for adhesives and sealants, and even the downstream markets, the downstream consumers they don't have visibility over the next following quarters. So demand for rosin across the printing inks, paper sizing, hot melted adhesives is still soft this year compared to the levels seen last year and years before. So across the rosin and turpentine markets, stocks are reducing, and that's good news for the industry, but the stocks are still considered at elevated levels. So looking to the CTO markets, higher fractionation rates depend on feedstock pricing as well on the TOFA-TOR balance. A persisting downward pressure on rosin, high stock levels, and weaker downstream demands are still constraining fractionators from getting more CTO volumes. So because of these weaker downstream markets and competitive dynamics, some buyers into adhesives especially have shifted from rosin esters, and that includes gum rosin esters, tall oil rosin esters, to hydrocarbon resins. That is a challenge because it can hinder the efforts of buyers towards a reduced carbon footprint. But even the ATR markets, as we saw, are facing headwinds, and tighter margins and high operating costs for hydrocarbon tech-fire producers in Europe have the potential to lead to more shutdowns, even for the case of hydrocarbon resins. So let's catch up. If you have any question, if you want to talk about the markets, we'll be happy to hear you. Don't hesitate to reach out to me, to George in China, or to Steve. So thank you very much for your time.